we're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning and happy Holi. You're watching All You Need to Know on Bloomberg Quint Live. I'm Alex Matthew. First, the headlines this morning. Asian markets are off to a mixed start as investors await the rate decision from the US Federal Reserve. State Bank of India will begin work on an alternative resolution plan for Jet Airways after talks with Etihad remained inconclusive. Two people in the know have told Bloomberg Quint this. The Reserve Bank of India has moved the NCLAT seeking to modify an order that restrained banks from declaring IL&FS accounts as NPAs. And the Securities and Exchange Board of India has directed the Fortis Group to continue efforts to recover over 400 crore rupees from the Singh brothers and other entities. Let's talk about what happened in the US now. Wall Street stocks finished mostly lower on Tuesday following conflicting reports on US-China trade talks. The Federal Reserve's announcement on policy is due later tonight, but the worry about trade seems to have overshadowed that expectation. Bloomberg's Abigail Doolittle tells you exactly what happened in that session in this report.
Stocks finished mixed in Tuesday's Wall Street session. The Dow fell by about 0.1%. The S&P 500 was down fractionally. The tech-heavy Nasdaq outperforming a bit, up 0.1%. But all of this represents a bit of a reversal. At session highs, the major averages up more than 0.5%. That tech-heavy Nasdaq up about 0.7% at the highs. And then there was a trade headline that came out, a Bloomberg exclusive headline that some U.S. officials think China is pushing back on a trade deal. We saw a leg lower, a little bit of a recovery. But at the end of the day, both the S&P 500 and the Dow did finish slightly lower. This ahead, of course, of the all-important Fed decision on Wednesday. Investors a bit jittery ahead of what the Fed might say. And this did send most of the S&P 500 sectors lower. 8 of the 11 sectors were lower, led by the utilities and financials. Both of those are rate-sensitive sectors, telling you that investors are a bit jittery ahead of that Fed meeting on Wednesday. To the upside, healthcare, consumer discretionary, and tech, those were the 3 sectors to trade higher on the day. And chips, that area of technology really outperformed, up 1.3%. AMD, a big mover, up more than 11%. Its best day since the end of January, as Morgan Stanley's bullish on the company's opportunity around Google gaming. We also had NVIDIA higher around its analyst day, and Micron up ahead of earnings, despite some analysts being pretty cautious on Micron with DRAM pricing dropping. But weighing the most on the S&P 500 behind that fractional decline, Apple and Disney. However, when you put together the fact that Haven assets were about flat, stocks were about flat, it was a neutral risk tone, but again, there was a choppy, jittery feeling to Tuesday's Wall Street session. In New York, Abigail Doolittle, Bloomberg News.
All right, now most Asian markets are open. Let's have a look at how they're trading. And let's in fact go live to Rosalind Chin of Bloomberg News, who's joining us live from the Hong Kong studio there. Good morning, Rosalind. We're heading into a midweek holiday tomorrow, but there's still a lot to look forward to today. How are we looking?
There is a lot going on today. Of course, the Fed policy decision will be out, and investors have been waiting on tenterhooks to see what else the Fed is going to say. Of course, given its dovish tilt and its lead towards other central banks having a more dovish tilt in the recent months. Now, of course, we have a lot of investors sitting on the sidelines, but we have a lot of investors also looking a little bit despondent at the outcome of these trade talks, which looks like they are turning a little bit sour between the US and China. We've got the MSCI Asia Pacific Index losing 0.4% at this hour. Now, what we're hearing is that China is starting to push back against US demands, largely because it's not yet received any assurances that from the White House that tariffs will be lifted if it agrees to the demands from the US. So we are seeing that, the US and China aren't seeing eye to eye. That, of course, is affecting sentiment on a day when many people are obviously holding back a little bit as well to see what the outcome of the Fed meetings are going to be. So we've got most of the region right now trading lower. The Nikkei, the topics both losing at this point. Hang Seng Index losing by 0.5%. Shanghai Composite down 0.4%. The CSI 300 losing also nearly 0.5% at this hour. S&P ASX 200 in Australia also losing down by 0.44%. In Korea, we've got the Kospi down by more than 1%, one of the losing by pretty much the most so far along with the major indices in Asia. Samsung there leading the declines, and that is after Samsung did say it sees a difficult year for its part business, and that's partly due to the slowdown in the smartphone market. It says it sees uncertainty increasing in the business environment. These comments coming out ahead of its AGM meeting, which is holding today, and we're expecting to see more lines out from Samsung. So that is one stock to watch today. That currently is down by 1.6%. And Hong Kong, a quick look at that. It's spent about $1 billion defending its currency peg for a second day, and the government says it's willing to spend a lot more to continue defending that peg. Is of course pegged to the US dollar. Right now it's at $7.84 to the US dollar. Back to you.
Thanks so much for that, Rosalind. Well, I'd like to speak a little bit more about what, in fact, you heard from Abigail as well as Rosalind. It's about the trade negotiations between the US and China. Apparently, teething issues continue to persist as China is seen stepping back on some of their earlier commitments over pharmaceutical and data services. However, President Donald Trump has said that the talks are progressing very well. Tom McKenzie of Bloomberg News has an update for you.
I have to wonder why this was priced in given the complexity of the talks. But what we're hearing from Washington, our sources in Washington, is, as you say, that China is pushing back, or at least backpedaling on some of its previous commitments, because from the Chinese perspective, they have put in place changes around intellectual property, and yet they have yet to see from the US side any commitment to remove tariffs from Chinese exports. And we've long heard from officials and sources here in Beijing that that is a priority for Chinese negotiators, is to get those tariffs on $250 billion worth of Chinese goods removed, and they've yet to secure that pledge because, of course, the US see that as a potential component in any enforcement mechanism. So what we're hearing from our sources is that China had made pledges around, for example, the protection of data around pharmaceutical companies. They've now walked back from that. We haven't heard anything, apparently, around linkages, patent linkages, something that the US was hoping they would be able to discuss and solidify with their Chinese counterparts. And then more broadly on data services, China is not giving anything, not putting anything on the table around data services. So there's a number of areas we're hearing from our sources where China is either backpedaling or pushing back against the US. It should be pointed out, though, that we're also hearing that there are divisions, of course. We've known there are divisions within the White House, within the US negotiating team, and those divisions remain over just how concerned we should be. Some saying that, look, this is just part of a regular negotiating tactic. Others say that this is part of a strategic backpedaling and that there is a heightened risk of concern here.
Well, at least the president doesn't seem too concerned. President Trump, what is he saying?
Yeah, absolutely. President Trump still seeming pretty upbeat. When he was asked about this, a question shouted to him in the room when he was meeting with the Brazilian president. He said, look, talks with China are going very well. But we know, and we've been reporting on this, that Trump is keen to get a deal to boost his election prospects and also to give the markets a boost as well. But of course, he's under pressure, not from just within his own trade negotiating team and his own administration, but also Democrats as well, the likes of Chuck Schumer saying, don't give up, don't go weak, make sure you get a decent deal. We know in terms of the time frame, by the way, that Mnuchin, the Treasury Secretary, and USTR Lighthizer are expected to be in Beijing on March the 25th for talks here, high-level talks with their Chinese counterparts, and then we're hearing that Vice Premier Liu He will then go to Washington to continue those talks. So the time frame still, we're hearing from sources in Washington, we're looking at this deal potentially being sealed in the next few weeks, but clearly there are some pretty major hurdles that remain.
And those hurdles are the ones that are actually causing a sense of despondency ahead of what a lot of people said was the biggest highlight of this week. The US Federal Reserve will be announcing its policy decision later tonight. While the consensus is that the FOMC will stay put on the interest rates, the focus is on its trajectory for the remainder of the year. Kathleen Hayes of Bloomberg News has all the details in this report.
We set this up, right? I mean, December, markets were shocked. Stocks are plunging. Fed doesn't signal anything. They hike rates again. January, all of a sudden, whoa, patience, wait and see. They don't have to do anything. But they left that two-hike dot plot consensus forecast for 2019 in place. Some people were even kind of angry about that, felt they were giving mixed messages. Nevertheless, since they made that very dovish turn, we see that growth numbers have come in weak. In fact, I want to jump into now a chart, the Citi Economic Surprise Index for the United States, which is firmly negative now, and that's the point. What is behind this drops is showing that there are more negative surprises on the economy than positive ones. Weak retail sales is among that. Jobs growth pulled back in February. It may be temporary, nevertheless it did. Industrial production got weaker as well, so all of this support that kind of thing. And in fact, Jay Powell himself said in a recent speech that he can see growth just over 2% this year. It was above 3% in 2018. So not anything to worry about, still solid, but definitely a pull down.
Kathleen, the White House doesn't necessarily agree, though. The head of the Council of Economic Advisors saying that tax cuts boosted investment growth this year, once again top 3%. Is this sound economic analysis, or is this a bit more politics coming into the fray now?
Well, actually, let me just lay it on the table. Don't judge it, but this is the White House, the president's annual economic report, and they are saying, yes, the first quarter looks weak, but the rest of the year looks good. Kevin Hassett, this head of the CEA, Council of Economic Advisors, told Bloomberg earlier, tax cuts have stimulated business investment, that's boosting productivity, and it's boosting workers' wages. Let's listen.
We've got a recovery that's long in the tooth and it's accelerating, and that's just the sweet spot for the American worker. And I think that's really the headline of the report, is that the state of the economy is strong and it's especially serving well those who most need it.
You know, the Atlanta Fed has a GDP Now tracker looking at growth coming in at 0.4% annualized in the first quarter, but everybody says it's temporary. It will pick up. One more chart, though, I want to put on the table that would suggest, maybe the Fed does have to think twice about reducing its forecast for rate hikes this year, because the stock market has been rallying like crazy in 2019. Financial conditions, let's take a look at this chart, have gone from being temporarily and seriously red when stocks were plunging and things tightened up so much, they're back in the green. So if the Fed were to reduce its dots now and things continue to pick up, stocks rally, the economy gets better in the second half, what would that mean for its rate hike forecast then? Would they have to shift it again? A lot of questions for the Fed. We'll find out the answers about 24 hours from, well, actually about 18 hours from now.
All right, well, not 18 hours, less than that. But Agam Vakil is here to tell you all about the day's trade and all that's happening in the futures and options. But you know that last bit, Agam, where they were talking about, prospects of lower growth and, stock markets going through the roof. Does that sound familiar at all?
It certainly sounds very, very familiar, Alex. But today's day of trade, it is going to be about whether or not we're going to see a pause after 7 straight days of gains. We were talking about this yesterday, that is this going to be a pause, and we didn't. We eventually saw the indices move higher. The real question is, can we expect a repeat today too? So at least as far as the SGX Nifty is concerned, currently indicating, well, a very, very flattish opening. We again, did see a lot of strength in the last 1 hour of trade, specifically when it comes to the benchmark indices, and a lot of gains coming in the mid cap and the small cap indices too. So there was buying out there, and it was the same for the banking indices. But moving on to your ADRs and see how some of these stocks have done abroad. Infosys, Dr. Reddy's, Wipro, Tata Motors advancing in trade. Are we looking at any counters which are weak? Well, Vedanta and HDFC Bank, but well, around 1% or less than that. But let's move on and talk about your FII flows. And the gush continues. Another 2,100 crores coming into the system. DIs, on the other hand, continue to sell. But if you've noticed, the DI number sell is always half of the FII buy, which means that even DIs are a little bit constrained when it comes to selling the stock in such markets. But among stocks which actually aided the Nifty higher, of course, Reliance Industries and the likes of ITC and Infosys have always been there. IT as a sector was one area which actually was pushing the stocks higher too. In yesterday's day of trade, they started participating in the rally. And moving on to your futures and options space, what we're watching out for is essentially the Nifty, which saw further longs building up with a 6% increase in OI, and the Nifty banking futures also looking at a 3.5% increase in open interest. Now, it's going to be another high turnover session, considering is the weekly expiry which has been brought forward, considering tomorrow is a holiday. And well, we have seen a lot of open interest addition in around the 11,500 call. And surprisingly, there's a substantial amount of put addition as well around the 11,300 and 400 puts. So we can watch out for that. And as I was suggesting, the 11,500 put looking at a lot more writing coming through. Let's move on and talk about the VIX, which has come off by as much as 2.5%. Not too much to speak for there. The put-call ratio edging up back to the mark of around 1.77. And moving on to your stocks, there's been no change in the F&O band today. Adani Enterprises, BEML, IDBI Bank, along with Just Dial and Jet Airways remain in the F&O band, as was the case for Reliance Power and Reliance Capital. And in terms of other stocks that we're watching out for, something like a Mindtree, of course, while it moved down by only 2%, there were a lot of shorts building into the system. And watch out for the open interest build up here. And BEML, Just Dial and Reliance Power. In fact, a lot of these stocks which were in the F&O band have started to see unwinding. So it's a wait and watch whether or not they move out of the F&O band eventually. But Alex, we're likely to see another mixed day of trade today. Whether or not there's a pause, it's a wait and watch.
Absolutely. Thanks so much for that, Agam. Well, before we head further into what's making news back home, let's take a look at the global headlines. Sue Keenan of Bloomberg News brings you the first word headlines.
Former Vice President Joe Biden, he is said to have decided that he's ready to enter the 2020 Democratic race. If so, he's seen as being the instant frontrunner, having led in early state and national polls for some time now, and also boosted by his links to President Obama. The 76-year-old is also expected to capture significant support from major donors, many of whom have been holding off while awaiting his decision. To the EU now, it is likely to tell Prime Minister Theresa May that she must decide by mid-April whether to extend Brexit to 2020 or risk leaving the bloc in 3 months without a deal. Sources say the other 27 leaders are ready to deliver an ultimatum, giving the Prime Minister 3 weeks to decide whether to gamble on forcing her twice-defeated divorce bill through Parliament or seek a longer extension. EU leaders will be meeting in Brussels on Thursday.
What would be the purpose and the outcome of an extension? And how can we ensure that at the end of a possible extension, we are not back in the same situation as today? In any case, the European Council will need to assess what is in the best interest of the EU.
Google will be giving Android phone users in Europe a choice of browser and search apps as it tries to close out almost a decade of EU antitrust investigations. It'll also change the way it displays ads for shopping searches in order to appease smaller rivals that blame Google for falling web traffic. The company has attracted record EU fines of more than $7 billion and a wave of regulation amid fear of the power of big tech. The Department of Transportation here in the U.S. is calling for a wide-ranging review of how the Boeing 737 MAX earned certification from regulators and from the airline itself. The new inquiry is separate to the criminal investigation that the Inspector General is conducting in conjunction with the U.S. Justice Department. Now, the 737 MAX range is grounded globally following 2 crashes in less than 5 months that may be linked. Global news 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, now sticking with the aviation space, but speaking about it in India. If you've been following the news, you'll know that Jet Airways has been in trouble with regard to its operations. In fact, just yesterday, the DGCA announced that there will be likely further attrition in the operations of the carrier. But the latest has to do, in fact, with the fact that lenders have decided to start working on an alternative resolution plan after Etihad failed to reach an agreement. Now, 2 people with a direct knowledge of the matter have told Bloomberg Quint that Etihad had reservations with the current resolution. Vishwanath Nair is joining us on the phone line. Thanks so much for joining us this early in the morning, Vishy. What is the latest that you're picking up with regard to the meeting that just happened? And it seems as if time is running out for a resolution as it stands.
Good morning. So what we understand from our sources, as you mentioned, the 2 people who are closely involved with the matter, is that there is going to be an alternative resolution plan that is going to be worked out by the lenders, primarily led by State Bank of India. On Tuesday, the lenders had a meeting that went on till late in the evening, where they discussed what could be done, considering that Etihad Airways is raising so many concerns with respect to the resolution plan that they had put out. Among the issues that Etihad has raised, one is on the right of recompense which lenders are seeking from Etihad. Basically, whatever haircut that the lenders will be taking on their debt exposure in the company, that will need to be made good by Etihad once the equity of the company starts turning around. Similarly, Etihad had an issue with the eventual stake that Naresh Goyal will hold in Jet Airways once the resolution plan is actually implemented. And finally, Etihad also had issues with the amount of money that they're going to be investing and the amount of control they will be getting in the company, considering their equity stake cannot go beyond 25% unless it starts to trigger an open offer. That was also something that the Abu Dhabi-based airline did not want to do. After all of these concerns were raised during a meeting between SBI Chairman Rajesh Kumar and Tony Douglas, the CEO of Etihad Airways, on Monday. During this meeting, which again went on till quite late in the evening, the SBI is said to have understood that Etihad sort of reluctant in agreeing to this resolution plan, which has forced them to, which has forced the lenders to consider an alternative route to try and resolve Jet Airways from its current stress. Remember, Jet Airways has a debt of about 10,000 odd crores. It is already losing out on its planes, which is getting grounded because of non-payment to lessors. The employees in the company have not been paid. Similarly, banks only have 180 days to do whatever resolution that they are aiming to do. If they're not able to do that, then according to the RBI guidelines, they will have to send the company to the NCLT for insolvency proceedings.
In the IL&FS case, the Reserve Bank of India has filed an intervention application, which basically means that apart from all the other parties, the RBI says that they should also be heard in this case. Now, what in its application the RBI mainly seeks is a modification of an earlier order where the NCLAT had passed an order to the banks saying that IL&FS and its related entities, none of them would be declared as an NPA. RBI in this case is represented by Senior Advocate Gopal Jain, who argued that there is an overlap of powers as far as this particular issue is concerned, and that they should be heard. The NCLAT bench, which is headed by retired Justice S.J. Mukhopadhyay, has agreed to hear RBI's side in this particular matter, and now the case will be listed on March 29.
There are a number of stocks that we need to look at today. Bodil Chemicals completed expansion of their dyestuff plant by 6,000 million tons per annum. After this expansion, the total capacity of dyestuff plants of the company stands at 35,000 MTPA, excluding the liquid dyestuff. The company also completed facility for production of thionyl chloride plant for 36,000 MTPA. Maruti Suzuki to raise prices for Eco model in a range of rupees 400 to 23,000 across variants as additional features get added to this product. Rallis India receives letter from Pollution Control Board to suspend its operations at one of its units in Gujarat caused by a flash fire during transfer operations. The annual shutdown of the unit is also being advanced from 1st April to mitigate any financial impact. Fortis Healthcare's board approves appointment of Dr. Ashutosh Raghuvanshi as MD and CEO of the company with immediate effect for a period of 3 years. Then we have Aarti Drugs. The board of directors approved share buyback of 2.82 lakh shares, which is 1.2% at rupees 900 per share, aggregating to 25.38 crore rupees. March 29th has been set as the record date. DLF's arm announces second joint venture with Heinz for developing high-end commercial project in Gurugram. The arm will hold 67% stake while Heinz will hold the remaining stake. The investment by the JV partners will be around 1,900 crore rupees over 11.76 acres of land owned by both the JV company. Jet Airways grounds 6 more aircraft due to non-payment to lessors. Lastly, we have Jubilant Life, Jubilant Employee Welfare Trust, to sell 35 lakh shares, which is 2.2%, for 267 crore rupees. The floor price is set at 777 rupees per share, which is at a discount of 7.9%.
All right, well, you'll find all the live market action right here on Bloomberg Quint Live, as you know, and you'll find several stories on the website, bloombergquint.com as well. Now, we told you a bit about Jet Airways. There's in fact more worries for the airline. The umbrella body of the domestic pilots of the airline has threatened to stop flying from the 1st of April if the resolution plan is delayed and salary dues are not cleared by the end of this month. And the Securities and Exchange Board of India has directed Fortis Healthcare and Fortis Hospitals to continue efforts to recover more than 400 crore rupees from Shivinder and Malvinder Singh, as well as 7 other entities. And finally, in case you haven't made the investments that you need to make in order to save a tax for this particular financial year, then you can have a look at this story on the website bloombergquint.com. That's Peaky Portfolio. Here's how you can still save tax this year. It'll give you a sense as to what you can do as of now, and it also talks about what you can do at the start of the new financial year with regard to the new rules that were announced in the interim budget and that take effect from the 1st of April. Well, that's all we have for you in this edition of All You Need to Know, but do stay tuned. As I told you earlier, there's a lot more coming up in just a short while. This is Bloomberg Quint.